Hi, I'm Ross Maynard. Welcome to this quick insight on valuing cultural assets. As accountants, we all know how difficult asset valuation is. There are equations and methods, of course, free cash flow, earnings with a multiplier, and so on. The problem is that in the real world, these equations rarely deliver a result that relates to the actual amount investors are willing to pay for a going concern. Companies that have never made a profit achieve stock price values miles above steady but less fashionable performers. How much harder, then, is it to value cultural and social assets? Deloitte believe they've developed an approach. In an article published in Italian, they calculate the value of the Colosseum in Rome as 77 billion euros. By way of comparison, this famous reminder of ancient Rome contributes approximately 1.4 billion euros per year to the Italian economy. So Deloitte have valued the monument at 55 years of its annual contribution. Cultural assets have historical and educational importance. The value of these contributions and the pleasure they provide to those that experience them are difficult to assess in monetary terms. However, such assets also provide a more tangible contribution as tourist attractions, generating cash for local and national economies. Property values in the local area are also enhanced by the presence of such assets. Accounting researchers have long sought to place a monetary value on such cultural assets. This is argued as being important to safeguard the future of these artifacts. Assets whose value can be shown are more likely to attract funds for preservation. The same argument is used for attempts to value natural environments and habitats. A counter-argument is that pleasure, learning and historic importance are intangible aspects of the human condition and impossible to value in monetary terms. Indeed, it might be said to be insulting to convert such beauty and majesty to mere dollars and cents. I can see merit in both arguments. The Deloitte approach to valuing Rome's Colosseum comprised three elements. Firstly, we have the transactional value to the economy in the form of ticket sales, spending on accommodation and food, and other general tourist spending. Second, we have what the researchers called the hedonic value, meaning the value attached to the pleasure in experiencing such an iconic and magnificent monument. To evaluate this, Deloitte used the relative increase in property values in the surrounding area compared to those in areas without an important monument. The third element of value is called a social asset value. This is described as the value that society recognizes in the asset. The Colosseum in Rome is over 2,000 years old and is recognized throughout the world. It clearly has a very significant social asset value. Deloitte carried out surveys and interviews to determine this social asset value, with 92% of those interviewed agreeing that the Colosseum should be preserved under all circumstances. A willingness to pay model was used to convert these responses into a monetary equivalent. The total cultural asset value ascribed to the Colosseum by Deloitte came to 77 billion euros. However, 97% of this value came from the third element, the social asset value, and I am dubious about a valuation based on opinion surveys. It feels like finger-in-the-air economics, which might be workable for an internationally known asset such as the Colosseum, or the pyramids, or Stonehenge, but what about the many smaller ancient remains in the world? These may be barely known about by the wider public and would therefore attract a very mediocre response in an opinion survey. And yet, they are still historically and culturally important and deserve to be studied and preserved. Let's consider the methodology of the Deloitte approach a little further. First, we have the use of the value of the cultural asset to the economy. I think that's fair. In fact, I think that Deloitte didn't go far enough with this aspect. The Colosseum in Rome generates 1.4 billion euros per annum for the local and regional economy. It's already been there for 2,000 years, and it will be earning money for the country and its people for many more years. So I think that evaluation of this cultural asset should involve a multiplier of this annual income. It's going to generate cash for the economy for many more years. So I think that a multiplier of 50 years would be fair. In fact, it would be hard to argue against a multiplier of 100 years. Using a multiplier of 50, we obtain a value from this first step only of 70 billion euros, which is very close to the total value that Deloitte came up with from the three elements. In my view, then, Deloitte significantly undervalued the economic worth of the Colosseum. The second element of Deloitte's approach is the value they attach to the pleasure in experiencing the monument. They used the relative increase in property values in the surrounding area to ascertain this value. Again, I think this is fair enough. The presence of an important monument or other cultural asset may make the surrounding area more attractive for people to live there and for businesses to locate there, particularly tourism-related businesses. This in turn increases property and land prices in the area. I think to ascribe this increase in value to the cultural asset is justified. If land and property in, say, 3 miles around the attraction is worth €1 billion more than land and property prices in an area without such an asset, then surely the asset has a value of €1 billion in this respect. So I agree with the second element in Deloitte's approach. A cultural asset will increase local real estate values. The third element is the one I have problems with. I don't like what Deloitte call social asset value, which is the value that society recognizes in the asset. I agree that society values certain cultural icons, but by definition, these are icons. There are plenty of historical remains, artistic works, and cultural artifacts which society does not value, either because they're not well known or because they're uninteresting to modern tastes. To give one example, medieval castles attract tourists, but the remains of peasants' dwellings from the same era rarely do, because there's not much to see, and because the lives of peasants in those days were not very interesting. Nevertheless, such remains are extremely important for archaeologists and historians to try and understand how ordinary people lived and died centuries ago. Consequently, I place no trust in Deloitte's method of using public opinion surveys to attach some sort of value to cultural assets. In summary, therefore, I accept the first two elements of Deloitte's method of valuing cultural assets. Their economic impact and their value in attracting people to live and work in the area are important. However, Deloitte based 97% of the value they calculate for the Colosseum on converting public opinion into some sort of financial value. This third element, I think, Deloitte should abandon, and rather develop the first two elements further. Nevertheless, it is a brave approach, and Deloitte are making a useful contribution to the broader discussion of the value and importance of cultural and historical assets. In a similar vein, the United Nations agency, UNESCO, has published a framework of thematic indicators with the aim of measuring and monitoring the contribution of culture to the objectives of sustainable development. Deloitte are not alone in this type of activity, and the general aim of integrating cultural assets into economic strategies is to be applauded. In addition, approaches such as this demonstrate the value of cultural, historic, and artistic resources in economic and social development. Do you know of any other attempts that have been made to value historic or cultural artifacts? If you're interested, the original article in Italian is on the Deloitte website at the link shown. Thank you for listening to this quick insight into valuing cultural assets. I look forward to presenting to you again soon. Goodbye.